And we are live.
Okay.
Fantastic. Give a second for everyone to come in here. But I want to welcome everyone watching recorded, first of all, to the show. So we got some people coming in. Um, Welcome to Thursday morning. We are on here every morning talking. Sorry, we are on our show every morning, but we are on here every Thursday morning talking about the investment world, what the heck is happening in it, what is changing constantly, and how to go about trading it and interacting with it in a way that's not gonna lose your money ultimately, right? Um, but we try to perceive it in a different way and look at it from a different angle that we can actually create systems and structures to be able to profit in the long term. Right? It doesn't matter how much money you make if you give it all back. So we really design it around being able to slowly and consistently gain profits and then keep them. Keep them. Um, is very important to us. So I want
That's always good.
to
That's always good.
welcome in Joe. How's it going today, Joe?
Okay. Well, I tell you what, considering the market, considering we
Yeah.
can't figure out why the market goes up or down, we don't need to when we're doing micro moment because we don't care which way it's going. We're not
Yes. Joe.
trading.
Joe moderates our micro moment technique, which is our near term technique. We trade very quick trades
Yeah.
in and out in under a minute. So
And, with the market being so crazy and not really knowing which way it's going, we're just having remarkable results. Um, Last week, we did 237.9104% return, and we had a full week there. We don't have a full week this week because Monday it was market holiday, and but so far for 3 days, as of when I left there today, and I don't think they did anything after I left, they were up 20.3269 or 70 or 85% so far this week. So we should go over 100. We've been doing this for 122 weeks as a subscription service. We've been doing it for about 5 years, just our own money, and we still just use these guys. Just stays on and Mark and Tim still just trade our monies, and
100,
so these are real trades and
122.
good results. Yeah. So
122 weeks.
we should be over 100% again this week, easy. So,
Wait, how many weeks, Joe?
122 weeks as a subscription service.
Joe, we not only missed our first anniversary of Micro Moment, but we missed our second anniversary.
I know it.
We
It just,
just forgot about it.
I know it. I know it.
Oh no, that's
It
61
just,
times
it just
two.
creeps
Oh,
by.
we are bad at celebrating those moments.
Yeah.
We
Now,
need to do better about that.
the only rub we have here, particularly with Randy, is Randy always claims he does better. So Randy, why don't you take it and make your claim, your nonsensical claim again that you do better?
No. I don't do better. Tim and Mark are like the real experts. They're at it every day, and doing the teaching and the training every morning.
And
And so
Randy
when
doesn't.
when
He's not
when
on every day, and he doesn't teach and train. Certainly not.
no
No.
when Joe talks about I I do the micro moment trading with SPX, and I'm waiting for um, probably is a good entry point just a little while ago, but um, not trading right now while we're on the webinar. Um, but I definitely enjoy that. And when Joe talks about that 122 days or whatever in a percent, those are things that they're doing online, live in the market, and showing people and talking to people exactly what's going on. So these aren't just computer generated. You could have done this. You might have done that. They're actually showing you how that they're actually doing them real live, right there on the internet when you
Yeah,
subscribe to their service.
yeah,
So
yeah. Each one of those 122 days is an hour. 5 days a week. If the market's open 5 days a week, it's 4 days this week. But from 8:30 to 9:30, and that's it. It's over. We're through. We're done. We're always back to cash. And today, like I say, we did eight some odd trades for about 13.4 something percent, but we're up 80 over 85% for the week.
Nice.
So, and that's a short week. So.
But
That
with
is,
but
yeah, go ahead.
I teach the cover call process where we use synthetic cover calls on a weekly basis, and so my positions last 2 days, 3 days, 4 days. So I don't do as many as Joe and Mark and Tim were talking about, because they'll do 4 or 5 positions a day or maybe even more, but they're in and out back to cash at the end of the day. Or with the synthetic cover call process, I'll have 4, 5, 6, 7, 8, 9, 10 positions for the week, but invested for a couple of days and then closed out. So the returns per trade are higher percentage, but because they're doing so many more, their overall percent return is a lot greater. So last week I only implemented 5 positions, and 4 of them were closed out by the end of the week for between 7.7% return up to 20.7% return on that invested capital. The fifth one actually it went down, and so I managed it into this week for additional profit. And then it looks like, although we have one more day of trading still to go, but it looks like it will probably close out this week. If not, it'll be real close, and I'll manage it into next week for additional profits to get that capital back. And one of the positions I entered this week, I actually entered it on Tuesday on Restoration Hardware, and I closed it early today. It went up $50 a share today, and so I decided just to close it and not wait till tomorrow at expiration, because somebody could start selling it and it could go down. So that one I locked in 22.2% return with all the capital back for 2 days. So
Wow.
they don't have to be held till the entire time of expiration. You can always close them early, and it just means that you're not garnering the maximum potential profit, but you're also locking in a profit and guarding against anything weird happening in the market in the remaining time. So, especially in these times when you never know which way the market's going to go, because it could be going down, 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 and all of a sudden it turns up for the rest of the day, or it can be going up, 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 and all of a sudden it turns down, and there's no predictability to that. So locking in a profit, getting back to cash, that's a good thing to do. With the micro moment trading with Joe and Tim and Mark, that's every day. They're always back to cash. Doesn't matter whatever happens to the market after that. They're done trading in an hour, and whatever happens the rest of the day doesn't matter. They start up the next day and start all over again at wherever the market is at that time. Where the covered calls is a little more, you're in the market until either expiration or until you close it. Now, we enter in the money covered calls, which is totally different than anywhere else in the market, but we enter the position to earn income with the intent of being called out. We want to be called out, and it's such a low strike that the stock can go up, sideways, or even down, and will still be called out, get all of our capital back, and lock in the return. If it goes down substantially, then we implement the management techniques to continue managing it, generating additional income each week until we do get called out. And that's what really sets us apart from everybody else, is being able to continue to generate income on a position even if it goes down.
What does it mean to be called out, Randy?
Well, to be called out means that you're actually going to sell your stock. So what a covered call is you're buying stock and selling an option against it, a call option. And that gives the right to somebody, whoever buys that option, it gives them the right to buy your stock at the price that you've agreed to. And they pay you, you can call it rent, they pay you money up front for that right. Then they don't have to ever buy your stock. They just have the right. So you have an obligation to sell your stock at that price if they decide they want it. So when we construct the covered call, we make sure that if we're called out, and that's our desire, we want to be called out, that we get all of our investment back and we have a profit above and beyond that as well. And if it's not called out, you can sell the right again and sell the right again. And you can keep selling that call week after week after week to generate income until you're called out. So it can also be used if you have a stock that you don't want to sell. Then we sell an out of the money call so that you don't get called out and that you just generate income while you're holding that stock. And a lot of people do that because they're wanting to get dividends from their stock. So we can show you how to not only get your dividend like you've normally done, but in that 12 weeks between the dividend being paid, you can generate income every week on top of the dividend and still have that stock without ever having to sell it. So it's a great way to generate income, and that's what we use the call for, is to just generate income on our holdings.
Nice. Very nice.
And Micah, Tim is at the doctor's. He
Oh.
was,
Oh man, yeah, we missed him. Hopefully it's just a checkup.
well, he wasn't able to be on the program yesterday or today, and but he's at the doctor, so we don't know.
Are you going to make him get a COVID test before he comes back on the webinar?
He's back into his test.
You don't want to transmit that through the mic. Yeah.
Yeah. You know, you got to be careful. You got to be really
So he
careful
wasn't
these
even
days.
on yesterday or today? Is he pretty under the weather then?
Well, he appears to be. So
Yikes. I hope he's all right.
Yeah.
Yeah, I'm moving back to Montana, and there have been 3 people really close to, like, that I very personally know. One is a very close personal friend, and the other 2 are in my partner's family that have all gotten it in the last couple days. Just heard about all of them in the last 3 days. So it's pretty crazy. If anyone's going through that out there, I apologize. It's can't be a fun ordeal to experience there.
Yeah. My 2 youngest brothers both contracted COVID and they got over it. So now they'll be immune to it. But they didn't have fun while they had it. They were sick.
Yeah. Yep. Absolutely. Well, enough. I mean, we hear enough about that. I imagine.
But that's one of the good things. When you're trading your own portfolio, you can do it from the safety of your own little room, wherever that you decide. You don't have to go out into the public. You can be like a hermit and sequester yourself if you desire, because all you need is a computer and the internet, and you can do that from anywhere. So just like Mark is on and off with his picture, but like he was driving his daughter to college, and he was able to trade even from his car. As long as you can get an internet signal, you can monitor your positions and do trading. So that's one of the other side benefits of being able to learn processes that you can generate income, is you decide when you want to do it, where you want to do it, and you're not locked down to any one 9-to-5 job or anything. If you're trading, of course, you have to do it while the market is open, but other than that, you're not locked down, and you don't have to do it every day if you don't want to. You could do it 2 days a week or 3 days a week.
Mm-hmm. I mean, that's been a massive effect of COVID since the beginning on the entire job market. Really has been the relevance of working from home, jobs transitioning from the office to working from home. I mean, working from home has really changed as a sentence over the last 2 years. It's gotten a lot more meaningful, and I mean, the entire infrastructure of the workplace is changing because people are staying, right? They're realizing, oh, this is kind of nice. I mean, I'm just going to stay remote. And I mean, we've already had a year to transfer these systems into a way that is effective remotely. So we're just going to keep doing it. There's been so much of that, and um, I mean, there's a lot to be said for having the freedom and ability to do that. Got a couple questions.
COVID-proof trading, COVID-proof business.
Exactly,
That's
exactly.
right. But also, and there was just a little thing on TV this morning. They were talking about how people were secretly having a second full-time job because they're working at home, so that they could have one computer over here on this side and do work for one. And since they would get their work done in 6 hours instead of 9 hours at the office, they go over on the other computer and do another job. So they're earning like twice as amount of money. You can do that
Yeah.
with micro moment trading. You can have a computer up while you're working there at home, and you can do micro moment trading for an hour, and then do all the rest of your work for your normal. And it's basically like having two jobs. You can generate income. You get to, see, hear Joe and Mark and Tim in the morning and get your trading done, and then do your regular job. And so it's like doubling your income, and not having to go anywhere else. You're basically using up the time you would have been driving back and forth to work. It used to take me 3 hours a day to get to work and back. And so when I was able to retire, that was like free time, an extra 3 hours a day to be able to do whatever that I desired to do. So it's another great part about the flexibility of being able to just trade from your computer anywhere.
Hey, Randy,
Yeah.
Randy, leaving Cezanne out. It's Cezanne, Mark, and Tim. There you go.
Oh, Cezanne, is she on there now?
Oh, yeah. She's on every day. Yeah.
Oh, man, I'm going to have to log in. I'm usually pretty busy in the morning, but I need to log in and say hello to Cezanne, because
Yeah.
we used to have a good time teaching together, too.
Yeah.
Gary's wondering, Randy, can you explain the synthetic part of a synthetic call? What makes that?
Yeah. And so a traditional covered call is you buy stock, and you have to do it in lots of 100, because one contract of an option is 100 shares of the underlying stock. So if I buy 100 shares of Apple and I sell one contract of Apple against it, I'm obligated to sell my 100 shares of Apple to whoever bought that option at whatever price that I decide. So Apple's trading at 155 right now. So I could buy Apple stock at 155, sell the 150 call, but get $7 for it. So if I get called out, I get $150 per share from the person that's calling me out, but I already got $7 a share from them up front. So I end up with $157 when I only spend $155. So I get all my cash back, plus I had $2 of profit. So that's a traditional covered call, the way that we do it, the in the money call. So we sell that call strike, that $150 strike, is lower than the price we paid for the stock. Synthetic means instead of buying the stock, which Apple costs $155 a share, so you'd have to have $15,500 and $15,600 just to do one option contract. Instead of doing that, I buy, and I teach this every Wednesday morning in a 2-hour live coaching webinar. But I teach how instead of buying the stock, I buy an option that gives me the right to buy the stock at a set price. And then I sell a call option that's a strike higher than that. So I might have the right to buy Apple at 140, and I sell the 145 call. So if I get called out, I buy the stock at 140 and I sell it at 145. But I only have to invest like $3. $3 a share instead of $155 a share. But I can still make the same amount of cash income, but I have a whole lot less invested. So to me, number one, it's less risk in that I only have $3 a share invested in the stock market if something goes crazy, instead of 155. And it gives a great return, because the returns, the cash income, is based on $3 instead of 155. So it increases the overall returns substantially. Oh, there goes I just got my profit on my micro moment trade. That was let's see, 40, 40 cents divided by 940. 4.2% return while we were talking here.
There you go. And that was just in a few minutes.
Yeah. It was just I was seeing that it broke through a resistance down there. The chart was all set up to decline, and I got my profit. So
you realize that's almost what a mutual fund makes in a year. They make
yes,
around 5% a year. Yeah.
absolutely. I mean, if you're finding some place that you can get 6 or 7% return in the whole year, you're doing pretty good right now, and we can do that in a day or a week. And so anyway, that's what a synthetic call is, Gary. Is but it's a whole process, a technique, a selection, and it's all rule based. So not only how to select the appropriate positions to have a high probability of being called out, because that's what we want to do, is we want to be called out. So it's the selection, which includes charts and fundamental and technical requirements. But in addition to that is, if it doesn't go up, sideways, or slightly down, then we have a management process that says, okay, but I can move it into the next week and continue generating income on it, waiting for it to go back up. And it doesn't have to go back up to where it started in order on the second week to get your money back. So it you can't describe it in a couple minutes. It's the teaching is 2 hours every Wednesday, and the returns are really pretty good. Like last week, between 6 or 7% and 22% for the week on the position. So and like Restoration Hardware. See, here's an example of the synthetic. So Restoration Hardware, I bought the 600 call and sold the 605 call against it. So that means I had the right to buy the stock at 600, and I sold somebody else the right to buy it from me at 605. I just made a profit on my credit spread too. And so if it stays above 605, then that person that bought the call is going to say, I want the stock at 605, so they can sell it for a higher price, and then I'll buy it at 600. Then I'll get $5 back. Well, I only spent $4.05 a share. So I spent $4.05 a share, and this is a stock that's trading at almost 700 today, and I only spent $4.05 a share invested, and then I closed it today for $4.95 per share return. If I waited till tomorrow and let it get called out, I could have got $5 back. But for that extra nickel, I'd much rather just say I'm done with it, got my money back. But that was a 22.2% return, 95 or 90 cents profit divided by $4.05 of invested. That's 22.2% for just 2 days, just 2 days of investment.
Let me say one thing, particularly what reminded me of was you showed the charts earlier. When you're taking Randy's course here, or you're taking the micro moment course, the 1 hour each one for 5 days, each trade day during the week, you're being taught by Cezanne, Mark, Tim, Randy, how to enter these trades. They're not, these are real trades, and you know exactly what they're getting ready to do, and you know why they're getting ready to do it, because that's why they're showing you that advanced charting tells you when to get in and when to get out. So it's not something that you're just sitting there blindly listening to them. You're actually learning something. And at some point, you're going to say, I don't need these guys. I got to do it myself. You can do that because you learn the stuff. You just have to subscribe to that micro moment charting. And because it tells you when to get in and when to get out. So it's not just, they're just not sitting around discussing like we're discussing right now. Say, oh, hey, here's the trade. Let's try this. It didn't work that way. These are real trades, real money. And every single one of them, you know why you're entering it and why you're getting out of it. And you learn based on that chart. So.
Exactly, Joe. And with my cover call process as well. I mean, I just reviewed the results, but that's not what I teach on is the results. I teach on doing it live in the market. So it's teaching so that you learn exactly how to do it, but at the same time, you get to see every single step that I'm doing at the time that I'm doing it. So you see how I manage in my own positions, and that's how I use that to teach. So it's teaching hands-on, where I send out an email that says, "Here's what I'm getting ready to do," so that you can follow along in your virtual trading platform and do every single step by step by step and learn hands-on. So you really get embedded what the process is, and you learn how to do it. And by having the webinars actually twice a week, every single week, you can ask questions all along the way and see live responses with the charts, with the analysis, and fully answering your questions all along during the week. So that's the kind of coaching that you get if you sign up for the coaching. Yep.
Absolutely. Absolutely. There is a lot to it. I like what you said about, taking some time to learn it. There is um, some assembly required, right?
Yes.
And it still blows my mind how little in comparison to, um, even think of like training for a job. Um, and it's a 2 weeks of training, or you train for a few days, and the amount of knowledge you pick up, I mean, it's really not super complicated in terms of anything else, right? It looks like a lot at first. I took off the 5 and 15 minute chart, right? It looks like a lot of lines, but really they are all the same chart in a different time frame. They're the same indicator applied over the different time frames. Now, this is just for the one technique, right? There's a lot within the toolbox, but this one chart, we look at it over a couple time frames, and it looks like it has a lot of lines. But once you start to break down and get into it, they are not independent of each other, right? They're not just like, well, let's take a look at the volume, and let's take a look at what impact this may have on it, right? And everything's going in a different direction. They are cohesive, and they were developed that way. When one goes down, if there's the volume, if there's the push, the others will domino after, and it will give you multiple timelines of confirmation. It's about creating a cohesive chart that your brain can actually understand and perceive and make decisions based off of, right? I've used a lot of different trading setups, and off of MMT, I had things that were like, thinking back on some of those trading screens I was operating on, they were just a mess. Honestly, there's so much going on, and there's something to be said for overcomplicating your trading. I've done it, and you have to find this balance of having the relevant information that you need when you need it, but also not having all of the information. You can't process it anyways. And what it brought me to was definitely just an analysis paralysis, right? Well, yeah, this and this and this, but this one little thing is going to keep me out of the trade, so I'm just not going to trade. Well, then next time, well, it's something else that just, there's this one factor, and then you just never get to trading and learning how to actually place the trade, make it happen, execute it well, stay disciplined, right? At some point you have to trade. At some point you have to make the trades and then learn from them and continue to gain that consistency. And if there's too much information, right, being directed at you, you can't make the decision to finally make that trade, when to enter and exit. You have to simplify a bit.
Yeah, Michael, you're so complicated. The world of day traders, none of them make any money. The CBOE says 85% of them lose all their money. They're trying, and that's why you have CNBC and all these. That's why you have Wall Street, because all these guys up there act like geniuses, and they're going to be able to tell when the stock's going up and when it's going down, and then you're going to be able to buy and make money when it goes up and blah blah blah. It's just a bunch of bull. They don't know what in the world they're doing. That's why they don't make our returns in one day. We make more than they make in a year. because we don't trade anticipatory gains or losses. We only trade the volume. We only trade the volume. The volume, you can see it. That's what that chart is showing you. And there's certain things in there. You do certain things when the chart tells you to do it. And it's none of all this other crap that all these people try to make out something like this. Go to some investment club meeting. You got all these old guys sitting around acting like they're they don't know their way out of a box, you know. And if those guys on CNBC knew how to get out of a box, they'd get out of it. They can't even get out of that CNBC, you know. And
see, Joe, that's the critical part. Is that chart that Micah has up right now, and that's SPY, but it would be the exact same look as SPX, and that's how I got my profit already this morning. Is you look at that chart, you learn how to read this chart, and you have to have this intraday streaming chart in order to do this micro moment trade where you're in and out of positions very quickly. But everything was setting up that says this is going down. So right back there, you just learn how to read all these lines. Keep going back to the right, Micah. Yeah, no, all the way to the right.
To current.
Yeah, right. Just a little bit back. Right there. You see where all of a sudden the blue line, the green line, the white line, and the yellow line all started dropping right there. And we have the bars down there at the bottom turned red. That just said buy the put right there. I don't need to know anything about what company it is, who's the CEO, what was their latest product. That just says buy the put, it's going down. I bought the put, put the order in to sell it for a profit, 4% profit, and it hit it. Then it just kept going down. I mean, it was also a classic, Tim's not here, but that's a classic Tim setup.
Great line.
It dropped down below the lower Bollinger Band at the same time, and that typically means it's just going to go down. But I don't watch it for how long to stay in it. I just put an order in immediately to sell it and lock in a profit, and that thing just dropped like a stone dropping in the pool of water. It just kept going down. Now it's hit a bottom. Could be setting up to start to go up, but I'm not counting on that yet. It doesn't even have a rising cycle. But you learn how to read. All you have to do is learn how to read these 5 lines and those 3 bottom charts. And that's what Tim and Cezanne and Mark and Joe, they teach that every single morning. And you come to the instruction and you learn how to read that chart, and then you learn how to do it on your own.
You know, the other thing is compound interest is so huge. And, you know, there's always these articles, how do you retire with $1 million 40 years from now? Well, number one, you're not going to be able to retire with $1 million 40 years ago because, a meal's going to cost $1 million. But anyhow, all these traditional on Wall Street, people say all kinds of stupid stuff that you're going to have to try to do all year. You're never going to get divorced. You're never going to get sick. You're never going to have any problems whatsoever. But you're going to be able to give them this money, and they're going to grow it at 5% per year or 4% per year. Right now, I give the example until people just run from me. Take $2,000, put it into an account, never put another penny in. Take one of the micro loans, or take just one of Randy's trades, one a week. 6%, just 6%. He made that just sitting here this morning. 6% a week in 2 years, 24 months of trading. You're going to have $850,000. You're never going to put a penny in cash above that $2,000. You're just going to compound it. I don't know how you build wealth better than that. You could be 30, and by the time you're 32, you're going to be set for life. You could be 40, and by the time you're 42, you're going to be set for life. Forget all that.
It's a matter of
the next 30 or 40 years. Give somebody money,
Yeah, it's a matter of filling the size, right? So it's good up until the point that you can fill that amount very quickly within the technique and liquidity. But
like Randy made much more than 6% just today. I'm talking about 6% a week. If you just listen to Randy, Of course, listening to Randy's hard enough. I mean, that's you deserve every penny that you make,
Yeah. So Kathy said, was that a SPX put? Yeah, yes, it was. And Pat also said, why do I use SPX rather than SPY? Micah, you touched on part of it in how many contracts that you have to buy with the amount of money that you want to invest. So with SPX, the price per contract is higher, so I have to do less of them. So when I want to buy and sell them, I'm not the big player in the market. I have a very, very, very small position compared to the liquidity in the market is huge. The S&P 500 index, I think, is the most highly traded index in the world. And so I don't have to worry about the liquidity. But also I only have to do a couple of contracts to get the amount of cash that I want to get input into the market. Where like SPY, I have to have 10 times as many because SPY is 1/10 of SPX. And the same thing if it's Apple, and I may have to have 100 contracts to do the same amount of money. The other big thing about SPX is it has preferred tax treatment. The profits on the indexes are treated differently by the IRS than a typical stock. It's called Section 1256, so you need to talk to your tax advisor as to what impact that would have on your individual, because I'm not a tax accountant or a professional. But it's called Section 1256, and it treats the profits has 60% long-term capital gains and 40% short-term capital gains. No matter you have it for 1 minute or for 3 years, it makes no difference. So that's another little benefit to trading like SPX as opposed to SPY.
Absolutely. Yeah, long-term and short-term gains and tax structure is a whole conversation. Absolutely.
For tax professional, that's not us. We don't give tax advice.
Yeah.
We're not certified as tax professionals, but it definitely has a preference, and it's called Section 1256.
Yep. Yeah, something worth your while to. I mean, just navigate your tax structure altogether. There's a lot to do within that, right? And you're essentially running your own business within that. There's going to be overhead, right? But you may not have the same tax benefits as if you were making revenue off of a business because it's a personal account or how you may have it set up. There's all sorts of different tax structures on what type of account it is anyways, right? That's why they have so many accounts and IRAs and different things like that. So there's a lot to it. And some things we can't necessarily speak to. I recommend getting with somebody to talk about that, honestly, because I mean, the amount of money that it's going to, the amount of difference it's going to make is going to pay for whoever you're going to talk to in the first place. Just by saying, oh, no, it's not this type of account, it's this, right? That'll pay for your interaction with that person, and it will continue to now you'll understand that structure. It'll continue to benefit you for as long as you trade, as long as you have that account. So it's really worth doing. We talk a lot about those things, about basic things on your platforms, how to negotiate your commissions, those things that are going to keep having an effect on your account for a long time. Why do I need to save 5 cents on commissions? It's 5 cents. It's really not 5 cents. 5 cents cheaper on commissions is a massive difference in your year. Massive. And definitely worth your time, right? You just don't get paid instantly for that, but the amount you get paid for simple little tweaks in your systems and in your process is really massive.
Hey,
Yeah, so Randy, the same tax advantages are true the futures trading that we'll be doing also in the new seminar. So that's a good point.
Yeah, and that's Mark behind the voice. Mark's going to be teaching that seminar this weekend on futures trading. And so everything that we've been talking about with this micro moment trading, with this intraday streaming chart, that's all going to apply to the futures that Mark is going to be teaching, is how to use futures instead of the options to generate income on a daily basis where you're back to cash at the end of every day as well. And I'm really looking forward to that because futures are traded 24 hours a day, except for 1 hour in the day when it switches over from today to tomorrow. But you can trade them, at midnight, where you can't trade options at midnight. You can only trade options while the market is open, but the futures market is a 24-hour a day. So Mark's going to be teaching that this Saturday and teaching you how to use those futures. So that's going to be another exciting addition to the opportunity to generate income where you can learn how to do it. And he's going to be teaching all how to read these charts as well.
Hey, Robert had the important question here. Robert says, when will invites for Saturday's session be sent? Robert, what you need to do is do support micromomenttrading.com. Support micromomenttrading.com. Attention, Sue Ann, and ask her, and she'll get you what you need to be able to sign in, sign up, sign whatever for those futures courses. Again, support.
Yeah. So, well, and Joe, typically, if you've already registered and paid for the session, then you get an email that says sign up for this link, and that's the link to the actual webinar. And she usually sends that email out on Thursdays, and then you get the actual link for the webinar, the seminar, on Friday. So, but contact her to find out where are you in that process. So the first step is to register for the seminar itself, and then there's 2 more steps after that.
And Randy, Mark is actually going to be doing it from his home office because it's on a Saturday, and not his car, not his cash mobile.
Sure, so that's correct.
Not the cash.
Also, if you haven't signed up, go to the website. Sign up on the website, right? There's a link on there to sign up if you have not signed up. So.
Yeah, and I think, Mike, it's streaming there on the bottom. Support at micromomenttrading.com is that's where you go to sign up, and that's where you go to do follow up if you're not quite sure. Did you miss something, or did you get the right link, or have you finished the process? Sue Ann is great. She'll let you know where you stand.
Yeah, Robert says thanks. I'm registered. Good deal.
Good.
Awesome. Yeah, Robert, we have to make sure everyone that is attending is signed up, so then we send out the when we send out the invite, so that we don't send out individuals after and have anyone get lost in translation. We want to make sure everyone is there, and then we give everyone that invite so they can all make it in successfully. So fantastic. Anything else you want to tell us, Mark, about what's going to be going on there?
Just to I guess what Randy said, be using the same charting package there. That'll be great. We'll actually be using the futures contracts. I think Randy's using options on the SPX, for this will be the actual contract itself. But these are E-minis for the NASDAQ 100, S&P 500, Dow, and Russell 2000, and even Bitcoin. So there's a Bitcoin futures contract out there that you can also trade. But all this will apply to any futures contract. But we'll go through all that and how to trade it, read the charts, and then we'll go to a live session eventually here during the week where you can actually be in a live trading room where we can do this and watch us trade these.
Awesome. Yeah, it's going to be fantastic. I am looking forward to it. Well, great, gentlemen. I want to thank you guys for being here. Anything else before we sign off, gentlemen?
No, not for me.
All right.
Nope, I'm off to baseball practice. Get ready for our championship game on Saturday.
Very nice. Very nice.
All right.
Yeah, we look forward to seeing you all on Saturday.
Yeah, hopefully bring the trophy home.
Yeah, exactly. If you're curious about what we're going to talk about on the following week, go sign up for the Cow Report on micromomenttrading.com. It's a free report, and we a bit like a newsletter. We are actually doing some massive changes to it very soon. We're going to have featured trades of the week, all sorts of new additions to that, and we're going to have a digital version as well. So lots of fun stuff coming. Go give that a look. A bunch of free educational content and trade examples on our TikTok, Facebook, LinkedIn, Instagram. Lots happening on Instagram specifically right now. So go give that a look. And we will see you next week.
Okay. Bye-bye.
Awesome.
So long, everybody. Have a good weekend.
Take care.
Take care. Stay healthy.
Yeah, likewise.